Hello everyone, hope you're having a wonderful start to your weekend. Welcome to another edition of the Weekend Analysis. I'm Taylor Moe with True Trade LLC, and it's good to have you. Thank you for watching. Here's the SPY weekly chart. We had a really interesting week this week. A lot of movement, some good volatility. In the end, the bulls closed the week strong. And we're going to go through the weekly candles, the daily candles, and even smaller time frames. And I want to walk you guys kind of through how I was looking at the market this week, how I recognized where the bottom could be, and how I recognized that the market would eventually go higher into the end of the week, or at least had a good probability to do so. All right, so let's get started. Here's the weekly picture of the SPY, the S&P 500. Again, this gray dashed trend line is our weekly resistance, touch, 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 and now two touches again, okay? We still have not closed decisively above this trend line, okay? So that's something I'm going to continue to watch. It's something that I have a continued realization of, that it is not impossible for us to reject back down to this bottom weekly trend line. But also, if you didn't watch last week's video, keep in mind this monthly green trend line was broken decisively, okay? So that's important to me for the longer term picture, and automatically in the back of my mind, I'm a bit more bullish, right? I'm never going to think I'm right about any bullish trade or bullish analysis, but it does give me that little bit more bullish bias in the back of my head because of that, okay, for now. So I realized the weekly trend line. I also realized the monthly trend line has been broken last month. That being said, let's go down to a maybe daily time frame and let's look at some of the price action from this week. So we had whatever type of news headline hit here on Monday here, and we had a sizable down day, and we've been talking about not impossible for a pullback. I talked about how at the end of a breakup month, it's not unlikely to see a retracement early in the month, and I gave you guys some areas to be looking for. I put these monthly fib retracements up. These 50 and 61.8 would be likely spots for the market to bounce, right? And so I don't know if I had 307.10. I had 307 area marked on my chart. As I saw we were opening under the 61.8% fib on Tuesday here. We had quite a large gap down. And I just want to go through how I got that number exactly, because some of you guys are probably like, why did he pick 307? Why did he actually pick what was almost the low of the day? You can see the low of the day here was 307.13. And so basically what I look for, guys, is a mixture of gaps, a mixture of former breakout areas, and when another thing which happens to be in this case, when a market gaps here like it did, gaps up, I want to see what area is that market using as support after it gaps. That's usually indicative of a very important number to the market, because a market will often gap over or under an important number, and it will come back to test it in the following days. And if it's holding a number in between where it gapped from and to, then that number is likely very important. So here on 11/1, we can see the market gapped up, and it made a low on this day of 306.96. It failed to fill the gap. Again, this day, low 306.71, closed at 307.03, failed to fill the gap. Here on this day, we do happen to go make a low of 306.06, and we fill the gap, right? And we come back up, and where do we close? We close at 307.10, right? We come up here, find some resistance. The next day, we have a pretty large support that's found and a nice rally off the lows. What's the low? It's 307.03. We make another low this day. What's the low? 307.27. You get my point, okay? You want to look for these former gaps and breakout areas where support is come and tested after, and it's hit many times. It has many different candle closes, many different candle lows, and look for these signs that signify an important number to the market. Now, I didn't have to stop at 3071, but that's what I saw as the next important number. And as we go down intraday here, I want to go through with you, exactly what I saw in my analysis this week. First of all, we see that large candle off the lows, and I think, okay, well, we're under the retracements, so I'm not going to take a trade here until we're back above the retracements. And so once we actually close this day, or even had this hourly breakup candle above the 61.8, it was much more likely that we were going to go fill this gap afterwards. We knew that the monthly had a breakout, right? And we knew that we should have bullish sentiment, but we could see a retrace. So after this breakup, it was almost certain that the market was going to be attracted to filling this gap here. Okay. And so how you want to look at these 2 days, Wednesday and Thursday, is you have an opening range low, right? The day opens, it makes a low of whatever it is here, 310.32, and it closes the candle near the gap. That's bullish, not bearish, because if it was bearish, we would run up to hit the gap, and the next maybe hourly candle would fall away, or at least after a couple would fall away. Right, but it sits there. It sits there. It closes an hour above the gap, 2 hours, 3 hours. It's just going sideways, right? It's not being rejected. That's a sign that the market wants to go higher. What's the next point? It's really these pivots, and after those pivots, that puts the breakdown candle high into perspective. Okay. We want to look at this candle not as a reversal candle, because there's quite a sizable bottom wick that's nearly half the candle. And another thing we want to look at here is if bears were strong, they would be coming down to test the opening range low, maybe the 50% fib. But they couldn't even get near the low, right? The low here is 310.32, and they made a low here of 310.58. Not really even close. Didn't come back anywhere near it, right? And once we broke back up into this range, it was pretty set that we were likely gapping up with the jobs number coming out. It still can go either way, but that's how you look at this price action, guys. You notice what are the important areas? The gap. How we reacted around the gap and around this bearish level of the opening range low. All the information we got was bullish, right? And even on Friday at this breakdown candle high, the first hour goes and closes, above it or right on it, perhaps 314.66 to 314.66, right on it. Next one closes above. So, as we know, the next level that would be magnetic to the market is this gap. Will Sunday, Monday bring lower prices? Perhaps because of this weekly trend line? Or will we try and fill the gap? I'll tell you what, if we got here and we start falling below this Friday opening range low, watch out below, guys. We're likely going back, I'd say, down to this 310 area. This Friday opening range low, guys, is going to be really important. Really, really important to the market. I think if we're going to stay bullish, we need to either stay above that, or perhaps if we do come down, we need to hit this gap and we need to rally quick off of it, right? I am still on the watch for a potential, drop in the market. It's not out of the woods yet until I see this weekly trendline break, okay? All right, that was kind of long, but I hope you guys learned something on that. There's a lot of good info, especially on the hourly price action there. Let's just go and look at weekly charts of some sectors now. We'll start with small caps. Small caps, we know this has been breaking out. We have these very defined trend lines here, very defined pivots, and we know it's been breaking out, right? it actually closed a few cents above this breakdown candle high. Now, I don't necessarily see that as a super important breakdown candle high. I already kind of thought we were going to be going past that. A breakdown candle high, I think, is more significant when it's really cutting through support. For example, you have a support here, and this breakdown candle cuts through that support. This one, I mean, your next major support is down in this area. It doesn't really cut through any major support. Whereas like this breakdown candle, you can see the support, it is cut through, right? That's what is more significant to me. So I kind of already thought this was going to break. It did end up closing a few cents over. So we take it for what it is. It's bullish, right? It's got a lot of room up to this next weekly trend line. It's more in a rising wedge. Not that it's a bearish pattern, but that's just the next trend line resistance that I have. It also happens to coincide with the very important level of 168.53 right here. Okay, and the place I got that number from is over here. You can see as the IWM comes up, it struggles with that area, and the highest candle close that it has is right on that number. Okay, and then you can see it finally breaks over, comes back, tests it, closes on it, breaks down. Okay, so, and it's also near the trend line. It's near the breakdown candle high. That's my next important area for a long-term IWM. Go down to a daily real quick, and you know what markets like to do? They like to come back and test breakout areas. This was our breakout. This was our retest, and we knew that the IWM should hold the breakup candle low in order to remain bullish. On an overshoot, it would go and fill this gap that's not too far away. On a big overshoot, we might see these pivots. But if we come back up and rally, that's bullish behavior, right? We closed above this breakup candle low. And, you know, immediately you can see we gap up and we sit and we sit, and then we gap above this breakdown candle high. It's bullish, right? We rejected the gap. There's a tiny unfilled gap there if you can't see it. So we closed about right on it, okay? So it is what it is. It's still long-term bullish. If we start to come back down towards these lows, if we break this breakup candle low and close below that, something else may be happening, okay? But right now, the price action is just telling us we're headed higher, okay? Next is the Dow Jones Transportation Average. This has been the one I've been watching. I told you guys I was going to be watching this, and I told you guys that these incredibly important zones are what I was going to be watching. You see, we have this weekly red zone that we did close above, and we failed to close multiple weeks above. And we know that the DJT has struggled at this zone many times, okay? So here's the deal. This could be an early warning sign, but it doesn't have to be, and it's not yet, okay? Right now, the DJT, it has this breakup candle, and until this breakup candle low is closed weekly below, then we don't really have any long-term fear in this market. We don't have any long-term fear in any of the markets, right? That's just the first sign that we may be headed down to the bottom trend line. On a daily, same thing. You're looking at this breakup candle and this gap right here, which we still have not closed below. On an overshoot, maybe this pivot. But, if we get below that stuff, we're likely headed down to this area, which coincides with the trend line. So this is an area that the DJT needs to hold. I will continue to watch this. But for right now, there's nothing that says the DJT can't just continue moving sideways in here to push through this tough red zone that it's been struggling with for so long. But right now, it's in a downtrend. it's showing bearish sentiment with these top wicks. And until it gets really above this breakdown candle high, and there's a slightly unfilled gap right above it. So that's the area here that we're looking for on a daily chart for closes above. It looks like it also would coincide with a trend line. We're looking for a break above that to be pushing higher. So this will be a big sign this week. Please, guys, keep this up on your charts. Mark these areas that I have. This will be a big one. Okay, this is going to be very telling, I think. Let's look at the XLF. We've said this is the strongest sector right now at the moment. Obviously along with tech is doing well, but the XLF, it looks amazing, right? It had a slight break of this trend line. I'm not going to look too much into it. It wasn't decisive. We could always move the trend line up to that close if it moves down, so I'm not going to make a case out of that. But what we did do, guys, is we closed the week above the former pivot high here. Pretty impressive. It's not bearish. That's bullish. If we look at the price action here, same thing, guys. It's a former breakout area. Here's the area right here. If I can draw a rectangle, maybe that would help. All right, it's right there. That was a breakout area. We broke up. We, came down from the former highs. We retested the breakout area. Sometimes you retest the top. Sometimes you retest a gap in the middle. Sometimes you retest the bottom. We retested the bottom. We could even retest, down here and bounce up, right? There's a lot of support, especially on this chart here. And we bounced, right? We bounced nicely. We ended up closing here, at the gap or a little above the gap. That's bullish behavior. And the next day we gap above and we close above the former pivot highs. It's bullish, okay? Now, monthly chart, very important. You can see I have another level marked here at 30.78. That's the XLF's closing high here on this month in 07 before the large crash, okay? So, to me, the XLF, it's showing bullish behavior at the moment, but we have to keep in mind that this high is here, and anywhere from 30.75 to 40 can see heavy long-term resistance. It doesn't have to. We're bullish, right? We came up near that area already, and we've fallen away, and we're back. That has to be seen as bullish. Until we get a sign, I don't really think I would take a short trade on this, but the awareness has to be there. And so mark this number on your charts and, be watching throughout the week how we're acting around that. Are we closing weeks above that, below that? Just keep it in mind, okay? Lastly, the SMH, the semiconductors, your AMDs, your NVIDIAs, okay? This one is, again, just eating time off the clock. It had, same idea, same look as the other markets. If you go down to a daily, you can see same consolidation we had. It broke out of it for one day, all right? And it came to what? A breakup candle low, right? There's a gap just below it, couldn't get there. We see it over and over and over and over and over again. Breakup candle lows, gaps. How does it act? It rallies off the low, it gaps up the next day, back into what? Back into the range, right? We're back into range. The one thing on the SMH, but again, I don't put too much weight into trend lines. I want to see a convergence of signals. Right now, I don't see a convergence of signals. What I see is a broken trend line, but I see this breakdown of the trend line on okay volume. I see the next day, the rally off the lows, much higher volume. we get back into essentially the price range that keeps us bullish. What do we do Friday? We close above this breakup candle high. We're back near the top of the range. Regardless of whether we've broken this trend line, trend lines are different for every person, right? Everybody draws them a little different, sees them a little different. Yes, I would like to see us be above this. If I see a rejection, I will be looking for a break back below the range, but I'm not going to trade that. I'm not going to guess that because right now the price action without this trend line, it's bullish, right? It's completely bullish because of the signs that I said. So yeah, guys, just keep watching. Again, it's not impossible for us to come down. But it's eating a lot of time off the clock, and it's not really getting rejected, right? So long term, this has to still be bullish, okay? Lastly, I want to give you two trade ideas, little education sessions on two stocks. One of them is Apple. Apple had an incredible recovery this week. First of all, I want to say that this thing, I believe, is going higher. Essentially, you can see, similar to what we saw in the SMH, bull flag, followed by a breakdown with a quick rally off the lows. And you can see, where do we have a breakup candle low? Right here. We also have one here if it came down farther, but this is the one. And you can also see, like I said earlier, right here on this day, there's a gap up, and the market comes and finds support right at this level. All right, the low is 256.85. What's the low on this candle? 256.29. Not too far off. Okay, not too far off. So keep in mind the importance of that stuff. So yeah, Apple came back, closed the week above the bull flag highs. That's a technical breakout, right? You've got, here's your range, right? You're inside it. This is a technical breakout on high volume. Look for Apple to continue. I don't have my trend line drawn on here right now, but there's actually a trend line that goes from these pivots all the way up here, and it ends around the high 270s, guys, is where I'm looking for Apple resistance. This thing can keep going. If the market keeps rallying, look for this to continue next week, okay? I want to go down to an hourly chart as well and just walk you through kind of the same thing as I did with SPY. So we see the rally off the lows. We get a nice hourly candle, nice hourly tail candle. We're aware of that price level. We're watching it at the time because we know that it's important because of the way it gapped over and tested. Now, as we get a low, maybe as we gap up, there's two levels that I'm watching here. And obviously, they're going to be both gaps, right? Because gaps are important. They're magnetic. Here's the first gap. There's the first gap, right? Here's the second gap. Now, on this chart, as we come up, we see a break above the first gap. First of all, that's bullish behavior. Bearish behavior would see this first candle and would continue down to try and fill the lower gap. Okay. So after this happens, until this breakup candle low is broken, this is going higher, right? The chances are it's going higher. So the day ends, we don't know what's going to happen. It closes back below the gap. Chicken company, they're trying to fool you. And it's probably not best to swing at that point. But the next day we gap back up, and we're now back up near the other gap. Okay. We get rejected the first hour. I say, okay, let's watch the second hour. Here's where a trade could be taken. Right? There's another hourly close above the second gap. And this one has a pretty high risk reward because you're looking at basically the top of the range, which is these pivots up here, right? You're looking from 264 all the way to 268. That's a pretty nice trade. Your stop loss can be, below this breakup candle low. So you're looking at almost a 4-to-1 risk to reward ratio trade. That's pretty damn good. So as it comes down, you can see it closes right on the gap. Breaks up, breaks up, breaks up. On the last day, this is another trade you can take, although risk reward is a little bit unknown because it's at all-time highs, of course. But this is a breakout on, look at the volume, right? This volume right here, I'm going to mark it with a price level. It's only matched twice in the past 20 days, okay? That's a sign of a good technical breakout, and you can see that it continues to rally $2 or so from that point. Me and my team did take that trade. It was one of the only great trades I really saw on Friday, but look for this to continue. I like that volume. I like the very long flag with the recovery back into range and Friday's breakout. If the market keeps going, look for high 270s. Hope you guys like that one. BABA is my other one here. BABA, you remember last week I said this was the zone I was looking for. I gave a couple of price levels on the upside, but this was the zone, the breakout zone, right? What do markets like to do? They like to come and test breakout areas. Say it a million times. Where's the breakout area? It's right here. It's right here. Here's a breakup candle. So that was kind of the top of my range. Where did it come to? I said 190 to 185 area. I'm looking to buy BABA, right? I think this can lead the market, right? I've said Microsoft before, AMD before. Those are kind of done for now. This is going to be the next one, okay? So for this week on BABA, we have a few gaps I've marked here, a few key levels. If we can get above 202.01, this has pretty good risk reward up to 206 and up to 2085. And then, potentially 211. I don't really expect that to happen this week, but you never know. So yeah, be watching this 202.01. If we get over that and the market's looking good as well, look for BABA to continue. Okay, guys? That's really all I have this week. I hope you guys learned something. I hope you guys found this beneficial, and I hope you guys like these trade ideas. We'll see if they work out as planned. But yeah, if you guys aren't subscribed, please subscribe, like the video, and share it with anybody that you think might be able to use it. Thank you guys for watching, and I'll see you guys next week.